This is the Asia Trade. I'm Heidi Stroud-Watts in Sydney. Your top stories this hour. President Biden dropping his bid for re-election after weeks of pressure, saying it's in the best interests of the Democratic Party and the United States. Vice President Kamala Harris announces that she intends to earn and win the party's nomination after getting Biden's endorsement. And markets are bracing for volatility on the US election shake-up, with investors scrambling to reassess Donald Trump's chances of a victory. The dollar is trading slightly lower in early Asia trade. Let's get you some more on that when it comes to the market reaction with this repricing of US election expectations. And of course, we're firmly sort of focused on the Democratic National Convention, which takes place later on in August, to see how that nomination comes through and whether there's going to be a big shift, particularly when it comes to the fiscal outlook and fiscal policy outlook, with a new candidate now that President Joe Biden has formally dropped out. Take a look at US futures. We're sitting a little bit lower there at the moment, by about just over 1% there. We're also watching, of course, some of that reaction in the dollar, just modestly a little bit softer, down by about 0.2%. Following the back of that news is how we saw the Bloomberg dollar index trading there. The US president really bowing to pressure from his own party, pulling out of the election race come November. We did see that big beneficiary, though, taking place with the climb in the Mexican peso. Stock futures, as I mentioned, looking a little bit volatile after we had that fall of the S&P 500 on Friday. We're seeing that early reaction across sovereign markets here as well, with Australian bonds looking a little bit softer in the early part of the Asia session. Take a look at what else we're watching when it comes to futures trading in Japan as well as China. China, of course, reacting to some more idiosyncratic policy news in terms of just that wash up from the third plenum and some of the refocusing of economic policy that we've heard from the leadership there. Watching dollar China there as well, given how much it's sort of really been reacting to the dollar, which at this point is seeing a little bit of a gain across the last few days for the first time in about 3 weeks. But let's get some more on that immediate reaction. Joe Biden abandoning his re-election bid and endorsing Vice President Kamala Harris to take his place as a Democratic nominee. Our balance of power co-anchor Kayleigh Lyons joins us now from Washington. And Kayleigh, of course, you've been across this breaking news over the past few hours as that confirmation came through. What are the questions being asked at the moment, both in terms of, what's expected from the presumptive presidential nominee and what other surprises might be in store given the news flow of the past few weeks?
Well, the question being asked within the Democratic Party is, can Kamala Harris actually secure the nomination? Because while she has, as you mentioned, gotten the endorsement of President Biden and a number of other Democrats, that does not guarantee that she will be the top of the ticket. We still have the convention in Chicago. The DNC begins 4 weeks from tomorrow, with delegates that had been pledged to Joe Biden that now will have to go to another candidate. So Kamala Harris says she intends to earn those delegates and earn the nomination, but we'll see how she does so over the next several weeks. Of course, assuming that she can secure the place at the top of the ticket, the next question that follows is who will be on that ticket with her as her running mate, as her vice presidential selection. A number of names have been floated, including governors of key swing states like Michigan in Gretchen Whitmer or Pennsylvania in Josh Shapiro, who did come out and endorse Kamala Harris in the aftermath today. But of course, this leaves a number of other questions as well, including how this changes things within the Republican Party. What changes for the Trump-Vance campaign now that they are no longer competing against an incumbent president in Joe Biden? We've already seen messaging from the Republicans trying to tie Kamala Harris directly to the policies of this administration, given that she has been part of it for the last 3.5 years. And the other question that Republicans are asking today is, if Joe Biden is not mentally able or physically able to continue on in a re-election effort, why should he be able to continue on as president for another several months? A lot of Democrats we've spoken with in the last few hours have pushed those concerns aside, saying that Joe Biden is making this decision for the country. It is not about his ability to continue on in this office, but certainly that is a conversation that is being held in real time in Washington.
Kayleigh, you talked about, potentially some of the political horse trading that will take place in the next few weeks before the convention. Are there any realistic other options here for the party?
Well, theoretically, anyone could throw their hat into the ring, Heidi. We've had reporting at Bloomberg that, for example, the governor of Michigan, Gretchen Whitmer, does not intend to challenge Harris for the presidential nomination. Whether she would be willing to be on the ticket as a vice president remains to be seen. But at this point, there is still every possibility of having an open convention in Chicago, where a number of candidates could throw their hat in the ring and compete with Harris for the nomination. Of course, that would be a bit more chaotic than going into the convention with a known ticket. But anything at this point could happen, we're really dealing with an unprecedented moment in history. The last time we saw something like this in the U.S. was back in 1968 when then President Lyndon B. Johnson decided not to seek re-election. He did so, though, much earlier in the primary process. It was back in March. We're now in July, again, just 4 weeks out from the convention. So the late hour here is really something to consider, knowing whoever the Democratic ticket is going to have to put together a campaign, a team, a message, introduce themselves to the American people, and then try the hardest that they can in the next several months to compete against Donald Trump on the ballot in November. I would just note on the ability to put that campaign together, one of the advantages that Kamala Harris does have is money. The Biden-Harris campaign has $100 million plus in its war chest right now, and Harris has access to that, having been on that campaign ticket more easily than any other candidate would.
We've seen a lot of kind of scrambling within markets as investors try to work out what this means for the Trump trade, right? I do wonder, have we heard much from the Trump camp there? Have Republicans sort of spoken at all? And how would that positioning be looking like at the moment?
Well, we have heard from Donald Trump. In part, he is suggesting that if he were to debate the next person on the Democratic ticket, Kamala Harris or otherwise, he would want to do so on Fox in September rather than ABC. He had some harsh words for President Biden as well in a post on Truth Social. But what we have seen from others close to him, including J.D. Vance, the vice presidential nominee for the Republicans, is messaging that ties Harris to the unpopular policies of the Biden administration, be it the border, the economy, other issues. That is likely what we're going to see from Republicans, trying to draw that line from Joe Biden to Kamala Harris and perhaps telling voters that there really isn't much of a difference between the two. Something else we have heard from Republicans, and this will be interesting to follow in the next several weeks, is the idea that there could be legal challenges. Again, Joe Biden secured the number of delegates needed to get the Democratic nomination during the primary process, in which some 14 million Americans voted for him. And Republicans are suggesting there could be a legal avenue here to make sure that no one else can get on the ballot, given that Joe Biden was the one on the ticket throughout the primary process. So we'll be watching for developments in that arena. What I would just say, though, Heidi, about the way markets are likely viewing this, a lot more is uncertain now than is certain. We do know that Joe Biden is no longer seeking re-election. We do not know firmly who will be taking his place or how that positions them to beat Donald Trump or not in November. And so it's just a lot that still needs to be sussed out here, and a lot could still develop in the 4 weeks between tonight and the DNC, which again starts 4 weeks from tomorrow.
Kelly Lyons there, our Balance of Power co-anchor with the latest. And let's get some more analysis now with Wendy Schiller, who's a professor of political science at Brown University. Wendy, really great to have you with us. So in a lot of ways, this was, of course, expected, right? Just a drumbeat of pressure on President Biden going into the events of the weekend. How do you rate the prospects of the vice president at this point?
Well, I mean, I think there's a chain of command. She has been second to President Biden, and she's also a woman of color and identifies with Black voters. And Black voters are essential to winning any presidential campaign for the Democratic Party. So in that, I think she has an edge against almost anybody else that could seek the nomination, because if Black voters stay home or if they feel betrayed by the Democratic Party picking somebody other than Joe Biden, who they've supported, and Kamala Harris, that would be almost disastrous for the Democratic Party along all lines of office: president, governor, senator, House member, you name it, and it would be just disastrous for them.
So part of the problem is also probably her role over the past 4 years, right? Because there's a lot of question as to where her policy position is. And I suppose part of that is really the function of the vice presidency. How important do you think will be for her to get out there, to get on the campaign and start messaging very strongly?
I mean, I think this is absolutely crucial for Vice President Harris. And we know in 2020 that her campaign ended early because of an inability to focus on particular messages that really made her shine brightly. So they're going to have to work very hard. And when I mean they, I think the Democratic Party leadership, because she doesn't really have a presidential campaign infrastructure. The one that exists for Biden will not be the one necessarily that Harris chooses to work with. So getting out there and making sure the messaging, such as reproductive rights that she's already been working on, certainly voter suppression. And let's not forget that in the states of Georgia and North Carolina, there are a lot of Black voters, and they weren't really in play before today. But now the map of swing states, I would argue, has now expanded, and the Republicans will have to play in that sandbox on a number of states that they probably weren't counting on before today.
It's interesting you mentioned reproductive rights, because is there an opportunity here for the Vice President to be able to speak on some of the more progressive, or I guess you can characterise as being more progressive issues that President Biden has not necessarily been that comfortable talking about?
No question, particularly with the selection of J.D. Vance, who was a smart but I think safe choice by the Trump campaign, given Ohio's importance to the Republican Party. But he is very much on the opposite side, limiting, restricting, banning abortion in a lot of cases, and maybe going after contraception. She's been on the other side, and suburban women, independent women, and possibly even some Republican women, although not that many, those that believe in reproductive rights, or at least abortion in the life of the mother, for example, they will look at Kamala Harris. They will take a look. And in that sense, she has an advantage over President Biden, where those voters might have already turned off.
It's interesting that while Democrats more broadly obviously support the decision for President Biden to stand down, we've had some support for the presumptive nomination for Kamala Harris. Others have stayed quite silent. Is that unusual to you? Do you think it's sort of imperative for her campaign that more support publicly gets announced?
Well, Heidi, the Democrats are walking a fine line. They want to look unified because they've just ousted their incumbent. But they don't want to be so unified that nobody's interested in the Democratic convention, which is August 19th to the 22nd. They want to leave some suspense so that everybody, social media, everybody pays attention. So when you see President Barack Obama saying they want an open convention, essentially they want all voices to feel heard. And a lot of sectors of the Democratic Party have not felt that they have been heard over the last 6 months. So they want their voice, they want their attention, they want to bargain with Vice President Harris over policy positions. But I think you've already seen quite a strong coalition behind Harris among her potential opponents, Josh Shapiro of Pennsylvania, for example, Gretchen Whitmer of Michigan. So now you're sort of saying who could be the alternative? But to shut the door on the conversation would be sort of counterproductive for Democrats who are now trying to build back enthusiasm among a lot of the constituents who seem to have been sort of walking out the door prior to today.
What are some of the other candidates? Because obviously you've talked about some of those names. There's also, California Governor Newsom, Governor Pritzker from Illinois, for example. There's a lot of popularity between Pete Buttigieg, although that seems sort of, structurally quite unlikely. Do you see any one candidate as being a potential come the third week of August?
I mean, that is a great question in terms of both the presidential nomination, but also the vice presidential nomination. You really need somebody who has been vetted. Completely vetted. Buttigieg ran for president, then became a cabinet secretary. There's probably not a lot we don't know about him. Gavin Newsom also survived a recall. But California has pretty high gas prices, just to say some of the things that might turn the rest of the country off of a California candidate. And Kamala Harris hasn't lived in California in 3 years. So in that sense, you can sort of see the disadvantages to Pritzker. He just brings Illinois, but Illinois is a blue state anyway. So in that sense, it's hard to imagine any of them could build the same kind of momentum that Kamala Harris could. And in terms of VP, there's also Jared Polis of Colorado seems to be in the mix. Andy Beshear of Kentucky just won re-election as a Democrat in a red state. So may not be able to bring that state with him, but probably appeals to a lot of voters in other swing states. So there's a lot of people who could be on the list for VP if the party is going to coalesce against Kamala Harris.
It's interesting as an outsider because a lot of countries, including the one that I'm sitting in, see only a matter of weeks when it comes to cobbling together a campaign, a political campaign, right? We don't get the sort of years-long, it seems, campaigns that we see in the US. Do you think it's possible at this point for the Democrats to put on a united front?
It is possible. Democrats are good at not doing that when they need to do it, and we've seen that in the last 40 years. But remember, this is somebody who is familiar, not totally familiar, but familiar to a lot of voters. So they're not bringing a newbie out on the stage. They can really shape this campaign with somebody who has campaign experience. And that's why choosing an elected official as a VP choice is really important, because they also will have been on the campaign trail. Remember, they're running against somebody America knows well. They're not trying to run against somebody who's brand new with fresh momentum. They're running against somebody who has negatives himself. And that is an advantage to them in terms of fighting to get this campaign off the ground in a short period of time.
Donald Trump is really in a position of strength at the moment, right? Coming off the RNC, and then prior to that, kind of mostly sitting pretty as we saw this mounting campaign of pressure against President Biden. How do you think he would be feeling now, and how would he match up if it does turn out to be, VP Harris who's on the docket?
I still think that Trump will probably show a polling advantage in swing states over the next couple of weeks because the party that comes out of a good, unified, organized convention usually gets a bump. So the Republicans will get a bump, then won't get the same kind of media attention. But the Republican mistake, or the Trump mistake, would be to treat Kamala Harris as if she were Hillary Clinton. And when he ran against Hillary Clinton, and he sort of really drummed up a lot of opposition to Clinton because she was a very polarizing figure and well known, people believed he might be a different kind of president. But they've lived through 4 years of him. So the people who did not vote for him again in 2020 may not respond the same way to his attacks on Kamala Harris, particularly if they're resonant of the same attacks he launched against Hillary Clinton. So they've got to be strategic about the way they attack Kamala Harris. I don't think the 2016 formula will work nearly as well this time around.
Wendy, really great to have you with us. Wendy Schiller, who's a professor of political science at Brown University, with some analysis there. As we see these big headlines, of course, President Biden exiting the race, endorsing his vice president, Kamala Harris, as now really the presumptive Democratic nominee going into that August 19th convention. But, of course, it is still really much an open docket. She's moving to try and build some of that support. We've had some really supportive members of the Democrats come forth already, but of course a lot of high-profile power brokers are still staying quiet for now. Biden saying he'd serve out his term, but endorsing for the vice president to take his place as the Democratic nominee, praising her as an extraordinary partner. We have more ahead on the Asia trade. This is Bloomberg. You're watching the Asia Trade. Time for morning calls ahead of the Asia trading day. And Credit Site says President Biden abandoning his re-election bid could create more uncertainty, typically putting markets in a risk-off mode. The head of US investment grade and macro strategy, Zachary Griffith, sees a sell-off in equities and a flight to quality bid coming through. In the meantime, Roundhill Financial also warning investors to brace for a spike in volatility. The CEO, Dave Mazza, says volatility could linger if Vice President Kamala Harris can mobilise quickly to give Donald Trump a material run. He believes if Trump continues to poll ahead in the polls and investors view his win as inevitable, then the Trump trade will take over and volatility will then decline. All right, let's get some more analysis on how these asset classes are reacting to President Biden dropping out, the endorsement that is put forward for the Vice President Kamala Harris. Garfield Reynolds, who leads our Markets Live Asia coverage, is here. So, we were kind of debating the scenarios going into Friday and over the weekend, right? So this was sort of, I guess, plan A that we were expecting, or maybe plan B, I suppose.
No, I think it was pretty much plan A that was being expected. Yeah, when you look at the way markets were trading, the drumbeat of voices coming out, basically calling from the Democratic side on Biden to step aside. And the only question by the time markets closed on Friday was, one, can we get past this tech meltdown? But more seriously, was a matter of when was Biden going to step down, not if. So it's probably to some extent a relief that it's come now. Think about it. We just got rid of potentially another week of everybody wondering, will Biden, won't he step aside? And, will the Democrat bid for, this year's US presidential election completely collapse, if they continue to tear themselves apart internally? That was what markets were seeing. It's sort of, if there was the initial thought after the Trump assassination attempt that, okay, the Biden concerns will be put aside and Democrats will unite around him. And then that, if that couldn't hold them together, well, kind of nothing could hold them together, was, I think, the market's perception. So you can even see in the early going this morning, we've got signs of a modest risk-on attitude. Currencies are slightly higher against the dollar, which may to some extent also be an acknowledgement that candidate Trump has made it so clear he would like to see a weaker dollar. But also US equity index futures rose. We'll see what happens when Asian equities markets open this morning. That's a bit of a difficult read across because, of course, futures markets for those closed Saturday morning, our time, at which stage it was still very much those concerns about the IT outages, about the politics and all the rest of it. So we'll get live pricing, as it were, on what Asian equity markets are seeing. But for now, you've got a situation where Trump's odds have come off, but they're still like 60% or so in betting markets. We've got to wait a little bit, probably a couple of weeks at least, until we see what polling actually shows now that this has happened. So you can kind of perhaps pivot. It's the word of the year, isn't it? Or maybe the decade. Pivot back towards looking at what the Fed is going to do. That's such a big issue, and that's now, far more important, I think, for a lot of assets than the political angle, especially because the political side of things may well stabilize with Donald Trump still expected, still the favorite after what's gone on over the past month to win re-election. But we've also got less of a chance of a sort of complete Democratic collapse that might hand the Republicans not just all three houses, as it were, but hand them very strong majorities if things had continued to deteriorate the way they were deteriorating.
So, to that end of what you're talking about, being able to still look at the Fed, PCE is what you'll be watching.
Yes, very much PCE. We're heading into the quiet period as well. But the most recent commentary from Fed speakers has been, very much open to cutting rates this year. In fact, probably sooner rather than you think a couple of months back. The talk was very much sort of, if we cut, it will be in December. Now that September cut is, fully priced in, and that's sort of what Fed speakers have been at least indicating. They would not commit, but they're indicating that they're not against what the market is pricing, and we'll be looking forward to the Fed meeting at the end of this month, expecting that they will cement that more. And if you think about the history of the Powell Fed, they really don't like to go into a meeting with huge surprises. If the market is going into the September meeting with still fully priced for a cut or very close to it, then they will cut. It's only if something shifts radically so that they wouldn't perhaps cut, and then they'll push back. You think of when we had the regional banking crisis last year, and initially the market moved very, very rapidly to price in lots of cuts, and there were even sort of hints of pushback.
Yeah. Garfield Reynolds, who leads our Markets Live Asia coverage there. More to come. This is Bloomberg. Take a look at how US futures are firming up at this point. We're actually looking like a little bit of risk returning to these markets, about 0.3% higher. We're seeing the edging higher of gold as well as traders continue to assess that fallout from President Biden's exit from the November election and the presumptive endorsement now of Kamala Harris. Well, as President Biden exits the November election race and endorses his Vice President Kamala Harris, we've been hearing from world leaders as well, paying tribute to Joe Biden after he's stepped down, but also, of course, giving some support in terms of what comes next. We've heard from Australian Prime Minister Anthony Albanese thanking him for his leadership, his ongoing service, really reiterating that the Australian-US alliance has never been stronger with that commitment to democratic values, international security, economic prosperity and climate action. We've also heard from Canada, of course. We heard from the likes of Trudeau. They're also reacting, and really a lot of this has been sort of the praising of President Biden's record as well as paying tribute to his achievements so far. Justin Trudeau saying that he's known him for years, he's a great man, and he's guided for his love of country as a partner to Canadians and as a true friend. So it was a thank you to President Biden as well as to the First Lady as well. Also taking a look at some of the other reaction we've seen from other major US allies, and of course we'll also be waiting to see how this plays out post the Democratic National Convention as well, when that nomination is more firmly in place. We're hearing from Keir Starmer there as well, saying that he respects that decision, looking forward to working together during the remainder of his presidency, saying that he's made that decision knowing what he knows based on what he believes is best for the American people. So some degree of clarity, although a great deal more volatility, of course, expected, with now the question over whether there will be that shepherding in of more support for the Vice President Kamala Harris as the presumptive Democratic nominee going into that August 19th to 22nd Democratic National Convention as well. That's coming up. Take a look at how markets are faring at the moment. We've kind of seen that pullback of some of the risk aversion earlier. Sydney futures a little bit softer, but of course this is a market that has been over the past few days consistently trading at or pretty close to record highs there. Japan futures also looking a little bit softer there. We didn't have a strong lead from Wall Street on that Friday session, but US futures looking a little bit more optimistic. Let's get some more analysis now. Christopher Smart, who's a managing partner at geopolitical advisory firm Arbroath Group. He previously served as a senior economic policy official at the US Treasury and the White House. Christopher, great to have you with us. I'll start with kind of your general reaction to the scenario that we find ourselves in, right? I suppose, we were talking earlier whether this was, I suppose plan A would be that the president doesn't step down, but this was very firmly the sort of plan B if, as the pressure built, he was expected to.
I think it's obviously very big news today, but I'm not sure that it's shocking news. It's something that, we have seen the drip, drip, drip of other senior Democrats either saying publicly or saying privately that it was time for the president to step aside. And, it's more than 3 weeks now since that terrible debate performance that he had. And it felt like increasingly the writing was on the wall that he was going to have to step aside. So again, I think in some ways, while we're still reeling from a series of unexpected headlines over the last few weeks having to do with this presidential race, uncertainty is actually a little bit lower today than it was yesterday.
Do you have any expectations that the outlook for fiscal policy under Vice President Harris would be meaningfully different? I know there's lots of expectations being built around perhaps her campaigning around other causes that the president hasn't been so comfortable or willing to talk about.
I think in terms of fiscal policy, they'll be very much aligned. There might be a couple of tweaks here and there, but all of that mostly depends on what kind of a Congress, if she is nominated, if she is elected as president, she'll have to work with. I think one of the things that is so difficult for markets to assess right now, given this back and forth just in terms of who will the nominees be, is trying to picture once they're in office what they might be able to advance in terms of their fiscal agenda or their trade agenda or indeed their foreign policy. So that's, to me, why markets aren't really moving dramatically one way or the other, because it's just so hard to put any bets down that policy will be in one firm direction or another.
There is still quite a bit of support sort of coalescing around the Trump trade, though. Do you think if the former president continues to kind of poll well for the next couple of readings, that will become a firmer bet?
Well, I think the Trump trade, in some sense, it depends on what you mean. If it's defense stocks, energy stocks, maybe some banking stocks that have outperformed the clean energy stocks, for example, that I think is a reflection of Trump odds of winning or not. I think when you look at things like a steepening yield curve or a dollar moving one way or the other, that has much more to do with the data we've seen coming in, the likelihood of more Fed cuts coming maybe as early as September. That is what is driving these markets, I think, more. Also, we're obviously in the midst of earnings season right now, and that, somewhat has tempered the optimism about stocks and, stock valuations. But I think that's what's driving the momentum rather than any of these political headlines.
I mean, former President Trump, likes to talk down a lot when it comes to inflation, but is the Trump trade by its nature also a pro-inflation trade, and therefore looking into next year, would you then be building a portfolio that looks at the likelihood of the Fed having at least to pause or perhaps even put hikes back on the table?
Well, I think that is very much the trade. If at a macro level, if we're talking about higher tariffs, less immigration, those are the kinds of things that are likely to be more inflationary and give the Fed pause. And that's what you may see, from one day to another in terms of those expectations. So yes, if I thought for sure we would see a Trump White House along with a Republican Congress, on the margin, you're going to see a bigger deficit. You're going to see higher costs in terms of imports. And that will give the Fed some pause. I think the flip side is he's also talking about having a weak dollar, and you can't really do that if interest rates stay high and the economy remains, relatively strong as it has been.
There's a lot of inherent sort of conflicting themes in that, right? If you were to broaden out to, I guess, contradictions, that's right. If you were to broaden out to perhaps wanting to hedge some of those risks and contradictions in international markets, would you be looking at India instead of China? Of course, a lot of the flows have been pro-India, pro-Japan, perhaps more at the expense of China.
Yeah, I think in any case, India is a country that in the longer term, the United States, Europe, the West in general is going to want to befriend and support. The risk of sanctions, the risk of punitive measures against India are much lower. The direction of travel in that relationship is clearly positive under any president, really. Whereas the direction of travel in the U.S.-China relationship, the European-China relationship has been deteriorating. So that to me makes some sense, but I'm not sure that one candidate makes that come along faster than the other. That's really going to be the dynamics of events that play out.
Do you think Trump 2.0 potentially then threatens the kind of degree of normality we've had back into the environment around global trade?
Yeah, absolutely. I mean, I think what you heard a lot during the convention, what you saw on the platform, the word tariff figures prominently, and not just tariffs to protect U.S. jobs or redress the trade deficit, but these are tariffs he brags about using to send immigrants back to countries that don't want to take them back, or to stop countries from buying oil from Iran. So these are tariffs that will be used for both economic reasons and political reasons. And I think, should he win, should he come back to office, that's the kind of more dynamic and much more unpredictable environment for any business dealing with trade of goods and services across borders, particularly between the U.S. and China.
We've seen
and I'll just add, I'm sorry to interrupt. I just wanted to add,
no,
and
continue.
increasingly between the U.S. and Europe, that's something that he has made clear in the past. He made clear in an interview just last week that we all love Europe. We all love to travel there, he says, but they do a lot of things in terms of their openness of markets to our exports that we need to correct. And he, I think, is not going to hesitate to try to at least threaten and indeed probably implement a number of tariffs across the Atlantic.
We just had breaking news crossing the Bloomberg that California Governor Gavin Newsom has endorsed Kamala Harris for that presidential nomination. So I guess that takes at least one of the potential, ifs and possibilities of a competing bid out of the question. But going back to sort of the market reaction, we're seeing oil rising a little bit in the Asian session. Do you think this is a straight out sort of positive for crude if we do get that as part of the Trump trade, or is it a little bit more complex than that in terms of the potential for prices taking a nosedive?
I think there are a lot more things moving the crude price than just the U.S. election. Obviously, the Trump industrial policy that is captured in the slogan "Drill, Baby, Drill" was prominent last week as well. And so I think U.S. energy companies will feel less pressure on regulation, maybe some more subsidies, maybe some lower taxes. But in terms of the global oil price, I think that has a lot to do with the U.S. driving season, with supplies and OPEC decisions, maybe on the margin, tensions heating up in the Middle East between Israel and Lebanon, Israel and Iran.
Is it a bit more straightforward when it comes to Bitcoin? We've seen, of course, the gains in both gold and Bitcoin, largely on the back of the comments around the US dollar we heard from Trump.
Yes, I think that one is very straightforward. That is even though he was a crypto doubter and a Bitcoin I think he said Bitcoin was a scam or something like that a year or two ago. The crypto industry has embraced him, has embraced the Republican Party, is likely to be much more friendly, much less onerous in terms of regulation, and much more supportive of their industry. And interestingly, not supporting a central bank digital currency, not supporting the Fed issuing a digital dollar that the crypto industry views as a threat and a competitive alternative to what they are trying to build. So yes, and I think President Trump is actually speaking at a crypto conference in Nashville later this week. So we'll see what the price does after that talk.
Krista Smart, always great to have you with us, managing partner at Arbroath Group there. And as I mentioned earlier, the California governor, Gavin Newsom, there throwing his weight behind the nomination for Vice President Kamala Harris to take over for that presidential bid after the stepping down from that nomination by President Joe Biden. We had heard earlier reporting that both governors, Newsom and Michigan Governor Whitmer, would be standing down and not preparing their own bids. They had been considered potential contenders for that Democratic nomination for president, but that clears the way a little bit more perhaps going into that Democratic National Convention, which kicks off on August 19th. We're hearing now from Gavin Newsom saying, with our democracy at stake, our future on the line, no one is better to prosecute the case against Donald Trump's dark vision and guide our country in a healthier direction than America's Vice President Kamala Harris there. We're also separately hearing from President Zelensky of Ukraine, thanking President Biden for his bold steps on Ukraine. Of course, a lot of concern there in terms of how that funding for Ukraine and support for Ukraine will potentially be affected if the former President Trump has another run at the White House there. President Zelensky there thanking President Biden for his bold steps on Ukraine. We do have more ahead on the Asia trade. This is Bloomberg.
What is clear and what is undisputed is that there were likely going to be a lot more trade wars. We're likely going to see tariffs being used as a geopolitical, new weapon.
The fact is, there is going to be a much tougher relationship, regardless of the administration, with China.
President Biden has been more effective, I think, in terms of hitting China in ways that matter for U.S. security. President Trump is promising 10% tariffs across the board on all nations, a so-called flat 60 on China. So I think it is a vitally important election for U.S.-China relations.
Our guests are discussing what the latest developments in U.S. politics could mean for global trade ties. And we are getting a flurry of supportive statements now coming through from key Democrats, including now the likes of Pete Buttigieg there, saying that he will do all that he can to help elect Kamala Harris as the next president of the United States. In an X tweet there saying Joe Biden has earned his place among the best and most consequential presidents of our history. Kamala Harris is now the right person to take up that torch to defeat Donald Trump and to succeed Joe Biden as president. So a pretty full endorsement there from Pete Buttigieg, of course, someone who is enormously popular within Democratic supporters there. And we are, of course, seeing that alongside from the Secretary of Transportation, Pete Buttigieg, as well as the California governor over the last few minutes, Gavin Newsom, also throwing his support behind that Harris bid. And we have heard from a number of key trading partner and allies, as well as competitors too, will be closely watching the November elections and who that nominee will turn out to be after the DNC next month. Kamala Harris will be announcing her bid, of course, for the presidential race and filing officially as well. Our China correspondent Min Min Lo is with us to talk about that. And, what would that sort of Harris versus Trump election mean for China? The election has been enormously interesting domestically.
Well, U.S. intelligence have found that China doesn't actually have a preference over a Biden or a Trump presidency. And I think Harris replacing Biden as a candidate here doesn't really change the calculus very much for China, because Harris is likely to continue more of the same foreign policy that Biden has put in place so far, which is to continue building on those international alliances to make a concerted effort to curb China as a national security threat. The only plus side of having a Harris presidency is perhaps we we could see a flaw to U.S.-China relations, because we have seen how the Biden administration has come up with very targeted tariffs on China, whereas Trump has pledged to impose a 60% blanket tariff on all Chinese goods. So the fear then is that it could really kick off an all-out trade war. But then again, Trump is also this very unpredictable character, and there's no saying that he may not eventually impose those tariffs. He may just dangle that as a threat over China in exchange for extracting some other kind of concession from China. The good thing about a Trump presidency for China is that he is less ideologically driven, so he may be less inclined to intervene in these so-called China's internal affairs in areas like human rights and Taiwan. He said that he's cool to the idea of protecting Taiwan, but Harris, on the other hand, is likely to continue that Indo-Pacific policy to build on the security alliances in the Indo-Pacific, Haidi.
Of course, China has its own domestic challenges aplenty at the moment. We had more economic policy news released over the weekend following the conclusion of the third plenum. A lot of focus here for presidency on local government debt.
Yes, local government debt. And I want to tie back to that foreign policy as well, because we saw, I think we can tell from the third plenum that China is really trying to prepare for the worst case scenario with the U.S. in the way it has placed tremendous emphasis on those new quality productive forces in investing in things like artificial intelligence, semiconductors, new materials, and so on, to move up the tech value chain and increase its resilience in the worst case scenario of a tech decoupling from the U.S. And President Xi himself said that national security is now placed at a more prominent position, which perhaps suggests its preeminence over the economy, although the official resolution did say that officials will try to achieve a positive interaction between development and security. So that's one big key point from the plenum. And the other point you talk about, that tax and fiscal reform, that's a very major reform as well. The government will give more resources to local governments and give them a bigger share of the consumption tax. And this is important because it means that it would give local government more incentives to encourage domestic consumption, and it would also give them more ability to spend and inject stimulus into the domestic economy to lift growth. And tying this back to foreign policy again, it would go some way to perhaps reduce that trade surplus and address some of the concerns by Western nations that China is trying to export its way into growth. So China clearly is here trying to rebalance its economy. Now, other priorities include giving market forces more of a decisive role in the market, opening up the market in certain areas, including in infrastructure, and giving private firms a way to participate in key national projects. So not a lot of big bang policies, but pretty much in line with what markets had expected.
Our China correspondent Min Min Lo there. Let's take a look at Japan as well. I want to bring out Tokyo Bureau Chief Issel Reynolds to talk about how Joe Biden's exit from the November election may impact the economic and government policies and ties with Asia. So, Isabel, a lot of the sort of strategists that we've spoken to don't expect massive policy shifts if we do see the candidacy from Kamala Harris, but of course so much depends on what happens in the election itself, right? Are we expecting a reaction from Japan on this decision?
I wouldn't expect very much official reaction at this point. Japan has sort of made a point of staying out of all this debate over who's going to be the president of the US. Obviously, they don't want to interfere in another country's democratic process. Having said that, if they do come out and say something today, I think it will be along the lines of sort of thanking President Biden for the relationship they've built up over the past few years. What we've seen happen is an increasingly strong relationship between the two militaries, for example, and also spreading that relationship beyond the two countries to work closely with other countries, for example, with South Korea, with Australia and so on, and really building up the kind of concept of the free and open Indo-Pacific to counterbalance the increasing prowess, obviously, of China in the region. So I think Japan has felt that the relationship has really gone quite smoothly over the past few years, and they would very much see Kamala Harris as a continuation of that policy in terms of foreign policy outlook, diplomatic outlook.
Is there much of a view in Japan on Harris as a potential president?
Yes, well, they haven't spoken about this officially, but when we talk to officials behind the scenes, they do see her quite favourably, I think. Her sort of partially Asian background is something that they see as a positive, someone who's background will perhaps give her more awareness of what's going on in Asia, for example. She's someone they're very familiar with in terms of official visits, summits and so on. Whenever Biden has been unable to attend a regional summit, for example, Kamala Harris would have been the one who took part, and she has reassured them of their sort of continuing support in various areas of all the policy issues that Japan is concerned about, like protecting the Senkaku Islands, for example. She's been strong on that point as well. She came to, for example, former Prime Minister Abe's funeral and took part in that. So a lot of that's been quite ceremonial, but it has been very much appreciated, I think, in Japan. And indeed, officials have said to me, they're a little bit puzzled why she's not more popular in the United States itself. So there is a slight concern there, I guess. But I think overall what we have to say about Japan's policy is on this occasion, for this election, they're very much focused on let's be prepared for both outcomes in the election. Going back to 2016, they assumed until the last minute that Hillary Clinton was going to be the one, and then they found themselves rushing to catch up and to get sort of familiarize themselves with the Trump camp. So I think they're going to be very focused on making sure that doesn't happen this time around.
Our Tokyo Bureau Chief Isabel Reynolds there as we continue to monitor the reaction here in Asia as the region wakes up to the news that President Biden has stepped down as nominee for the November presidential election, instead throwing his endorsement and support behind his Vice President Kamala Harris. We're getting more endorsements and supportive statements globally and within their own party as well. More ahead on the Asia trade. This is Bloomberg. Take a look at how we're trading across gold at the moment. Of course, we have seen that rise both on the back of the former President Trump's comments about gold. Some of the US election chaos escalating, though, after President Biden dropped out. We're seeing those further gains for gold as well as for Bitcoin there as well. We saw bullion rising by about 0.5% in early hours, really haven appetite, a lot of uncertainty over what has already been a pretty tumultuous US election campaign. We get the rest of the market reaction with the opens in Sydney, Seoul and Tokyo next. This is the Asia Trade. We're counting down to Asia's major market opens. And of course, as the Asia trading week gets started, Paul, all of the focus is really on DC and the sort of turbulence that we continue to see from the US election campaign progress. Of course, what we know is President Biden stepping down from his nomination, throwing his weight behind his Vice President Kamala Harris. We're now seeing a number of, potential possibilities in terms of that nomination now supporting Vice President Harris as well, but also potentially some other names in the hat.
Yeah, that's right. It appeared that we're getting a lot of endorsements rolling in, Gavin Newsom among them, Gretchen Whitmer reportedly as well, backing Kamala Harris. But now we're just getting news that Joe Manchin weighing a bid for the presidential nomination, but a few barriers in his way. Well, first off, he's not a registered Democrat anymore.
It's a minor technicality. He would presumably re-register first.
One would expect so.
Let's get you straight to the market open, though, because we have seen this kind of scrambling for investors to work out the pricing around that so-called Trump trade. What does that potentially even look like? Potentially, we are seeing still quite a bit of upside when it comes to some of the gains in Asian currencies, clear upside in the likes of gold and Bitcoin, for example, as well as some modest gains across crude oil. But equities-wise, we're seeing perhaps a bit of a softer start to trading. The Nikkei 225 down by just about 0.3%. We're seeing modest weakness there in the topics as well. Of course, last week's big sort of washout for big tech continuing to haunt some of these names, and we'll see how that plays out throughout the course of the start to the Asian trading week as well. Dollar yen holding pretty steady at 157.41. We had a bit of dollar weakness there. In fact, for the broader dollar complex, I should say, pretty broad-based weakness against Asian currencies on these political developments, as well as, of course, the continued rhetoric from the former President Trump about his wish for a softer US dollar as well. We're also watching some of these China assets as well, given that we did have a little bit more illumination around the policy priorities for the leadership as the third plenum wrapped up there as well. We had a little bit more renewed focus on the issue of local government debt. Taking a look at Korea, as we're focusing on, of course, some trading that is a little bit softer across those big tech names. We'll continue to watch those chip names as well, Paul.
Let's take a look at how we're setting up for trade here in Australia. Of course, a staggered open, but one of the first major markets to have an opportunity to react to this news out of the US. A little bit of softness at the moment, although it might be worth keeping an eye on some of those Aussie gold names today, because we're seeing gold catch a bid, and when you price gold in Australian dollars in particular, the story gets even more attractive around that. Seeing a pretty big move in yields at the moment, moving downwards. The 10-year for the US now 421.55 in the early going in Tokyo. Aussie dollar, kind of mentioned there a moment ago, holding pretty steady, gaining a little, 66, just below 67 cents US.
We are also getting some of the export numbers as well. The South Korea first 20 days exports to the US rising 13.4%, rise of over 20% for China as well. Crucially, those chip exports numbers rising 57.5% year on year for the first 20 days of July there. The average, when it comes to the average exports, daily rising just over 11%. Let's get some more now on our top story. Of course, Joe Biden's decision to abandon his re-election bid, his endorsement of Vice President Kamala Harris to take his place as the Democratic nominee. Bloomberg's political news director, Jody Schneider, joins us now from Washington. It's been very interesting. Over sort of the last 20 minutes or so, we've had some of the confirmation from, the speculative other nominees that could have been, right? The California governor, Gavin Newsom. We've heard from Pete Buttigieg, the transport secretary, as well. Interestingly, Joe Manchin, who is currently not a Democrat, suggesting, we're hearing from sources, that he may be weighing a bid for the election, for the nominee role as well. So at this point, how sure are we that there will be confidence in that support behind the vice president?
Yeah, well, it looks like, Heidi, this all just happened, right? We didn't think the president was necessarily going to announce this weekend that he wasn't going to run. He had given signals that he wanted to stay in the race and start campaigning again. And then this early afternoon here in Washington, we got that news. So it's early times, but he is throwing his support to Harris, and a number of key Democrats have done so as well. Former President Clinton, former presidential nominee Hillary Clinton. We've heard from some donors. We've heard from a number of lawmakers. We haven't heard from some top lawmakers yet, but it looks early on like Harris would be the nominee. It would make sense for her to be the nominee. First of all, she's been vetted. She's on the ticket, so the money flowing to the campaign could go to her. After you, as you noted, hearing from the California governor and the Michigan governor that, according to CBS News at least, that she won't be throwing her hat in the ring, really does make it sound like it will coalesce behind Harris. And that makes sense for the Democrats because they have less than a month to their convention. So this is really, right up against a deadline, as we say in journalism, and they really need to make their choices soon. There is some thinking that they should throw it to a convention, at least, to look like they're going through a democratic process, since she was, she was approved as part of that ticket, but at the top of the ticket was somebody else. But at this stage, to raise money, they'll need an enormous amount of money for this campaign. And given how late it is, it's looking, the early betting is that she will be supported by the party.
Yeah, logistically at least, Jody, the path of least resistance certainly there for Kamala Harris. But you mentioned the potential of going to an open convention. In terms of that, we've got to reach back into history more than half a century to 1968, when the Democrats last had an open convention, and it did not go well. Obviously, there's some eagerness to avoid that. And also, if Kamala Harris does become the nominee, who's going to be her running mate?
Yeah, so that's the real question. If she's the nominee, and this is a game people have been playing in Washington the last few weeks, there's talk of it being someone like Josh Shapiro, a popular governor in Pennsylvania, who could maybe deliver a state. And we know those blue wall swing states of Pennsylvania, Wisconsin, and Michigan are going to be so crucial in this election, just as they were in 2020 and 2016. So you pick someone like that, and, perhaps he delivers the state. Other names out there, Andy Beshear of Kentucky, who's a popular governor who's done well in a red state as a Democrat. So other names like that have come to the fore. But some of the big ones, and we hear J.D. Pritzker from Illinois had been mentioned possibly as the top of the ticket, but maybe he would be a good vice presidential name. We've heard, everyone's saying, when are we going to hear this? But she doesn't, if Kamala Harris is indeed becomes the VP pick, she really, the top of the ticket pick, she doesn't need to really pick her VP until just before the convention, just as Donald Trump did with J.D. Vance. So we may not know for several weeks yet.
All right, keep them guessing. Bloomberg's political news director Jody Schneider in Washington there, Heidi.
Yeah, watching the China reaction as well, but of course they've got plentiful economic challenges of their own. To that point, we actually have some significant breaking news from the People's Bank of China. The central bank, they're cutting its 7-day reverse repo rate to 1.7% from 1.8%. For a reminder, this is now essentially the benchmark rate, at least according to usage by most economists. And it's quite interesting because we had potentially been waiting for perhaps some easing from the Fed to give the PBOC a little bit more room to be able to cut, but that cut has now come via that 7-day reverse repo rate to 1.7%. We did see it standing pat on its one-year rate in earlier in July. Presumably, there is still some sense of prioritising the stability of the currency, but Bloomberg Intelligence has held that belief that the PBOC really does need to ease monetary policy given the continued level of sluggishness that we see across most economic indicators. Inflation, of course, has been incredibly weak, both on a consumer basis and on a factory gate prices. Consumption, of course, we know how weak that story is, and, of course, the housing route there as well, Paul.
All right, let's get back to US election risk now. Bring in Hartmut, Issel, head of APAC Equities and Credit at UBS Wealth Management. Hartmut, even by the usual standards of US politics, it has been a wild couple of weeks. How's your scenario planning for the next 4 months and beyond?
I'd say first and foremost, probably wouldn't read too much into the sort of incremental changes now. We have to consider that we still don't know. The election probably is still very close to call, even though on one side we don't know the candidate. But I think this is also what the betting market suggests. So let's not maybe stake too many chips on just one outcome. And the second layer I would also encourage every investor to think about is that even if we did know which candidate wins, or especially if it's the Trump side, do we really know what exactly or how much exactly of what's been talked about right now will be implemented one for one? So a couple of uncertainty. I think in this sort of environment, what I think is interesting for investors to consider is sort of investment positions that are sound by themselves, but can also cover several scenarios out of the elections, especially also on the Trump side. I think that's a good setup to enter the next couple of months. What I can think of here is, by the way, maybe UK stock market, maybe gold, maybe a Swiss franc, these types of positions.
Yeah, in terms of the haven trade, I mean, we're seeing very much a risk-off move here in Australia at the moment. The ASX is off by 0.75% now, all sectors in the red. But you mentioned havens like gold. We saw Bitcoin move higher. We've got yields slipping a little today. Once the dust has settled, though, do you see potential for equities to continue their upward march, or is the haven trade the place to be in the next few months?
Yeah, but by the way, maybe some markets that open slightly down today. I'm not even sure if this is so much because of the election or possibly just a lead from Friday, end of last week from the US. So remains to be seen.
Hartmut, I wanted to get your reaction to the breaking news from the PBOC. Certainly a lot of economists were expecting perhaps September going into the end of the year for when we would see the PBOC kicking off rate cuts, perhaps more, in synchronicity with what we see from the Fed. Has it surprised you that they've gone now?
Maybe the timing slightly surprising, but I guess the fact that they're further easing, that is probably not surprising at all, neither for us nor for the market. What I would say though is, since that was sort of expected eventually to happen, it's probably more interesting for us to gauge is if we get more details out of the plenum. What we have seen so far in the shorter statements is probably incrementally not so much incremental news flow. So let's see if perhaps there will be some more structural efforts, especially on the tech side I can think of. I would believe if we see something happening in the direction of a bit more balance between the tax intakes and of course also the spending between the center and the provinces, something that also structurally can give us a bit of a lead towards an improved over time that situation on the local side. Things like that, I could imagine, could be perhaps more supportive for the market than or compared to the PBOC action right now.
Yeah, it doesn't sound like you think that monetary policy transmission at this point is going to make a meaningful difference.
It's marginal. Certainly, it's supportive, but I believe other measures. Also, maybe watching the property market, etc. These will be much more important to see if if the Chinese stock market can lift. Yeah, the action today, I believe, is only is positive, but only marginally so.
If you take a look at some of the risk around what the US election will be, kind of going back to our top story, how do you hedge that through international markets? Is there more of a preference for, say, India over China at this point? Is Japan still a good bet in the next leg of what this rally could be?
Actually, the first market that comes to my mind is the UK market. And why the UK market? Because it can really cover different scenarios also around this election. Let's say you get a Democratic win and get that soft landing, where we know that the US data is getting softer, inflation is getting softer, which then for a market that is highly cyclical in terms of its composition, should be positive, especially if it's really smack at the bottom of its valuation range. So that could lift it to some extent. And then if you do get a Trump government on the other hand, and yes, some may argue that that is maybe for the fiscal side where there's going to be some fiscal pumping. Well, that's anyway good for commodity-related equities, in my view. So, yeah, that's probably the first place I would look at for some sort of hedging and a good underlying story in any case, irrespective of the outcome of the election.
All right, Hartmut Issel, Head of APAC Equities and Credit at UBS Wealth Management. Thanks so much for joining us. We have more ahead on The Age of Trade. This is Bloomberg.
What is clear and what is undisputed is that there were likely going to be a lot more trade wars. We're likely going to see tariffs being used as a geopolitical, new weapon.
The fact is, there is going to be a much tougher relationship, regardless of the administration, with China.
President Biden has been more effective, I think, in terms of hitting China in ways that matter for U.S. security. President Trump is promising 10% tariffs across the board on all nations, a so-called flat 60 on China. So I think it is a vitally important election for U.S.-China relations.
Our guests there discussing what the US election result could mean for global trade tensions. And China as well going to be closely watching the US elections as Kamala Harris announces her bid for the presidential race. China correspondent Min Min Lo's with us now. So Min Min, Harris versus Trump potential matchup, what are the implications for China?
Well, this doesn't really change the calculus very much for China because Harris replacing Biden as a candidate will likely mean a continuation of policies we have seen under the Biden administration, which means when it comes to foreign policy, continuing to build out those international alliances to make a concerted effort to curb China's rise as a national security threat. The only plus point with the Harris administration is perhaps, and that's a big perhaps, we could see a flaw to U.S.-China relations because we have seen those those tariffs introduced by the Biden administration as being quite targeted on $18 billion worth of goods, and the Democrats have really been highlighting how targeted those regimes are. But with Trump, he has promised to pledge 60% blanket tariffs on Chinese goods, and that could spark an all-out trade war. But again, analysts have also cautioned that Trump is a very unpredictable character. He may not end up imposing those tariffs and simply dangle that as a threat to extract some other form of concession from China. The good thing about a Trump presidency is that he is less ideologically driven, so he's likely to be less inclined to intervene in China's so-called internal affairs in areas like human rights and Taiwan. He said that he's cool to the idea of protecting Taiwan, but a Harris administration would likely mean continuing to beef up on that Indo-Pacific strategy to beef up security alliances with other partners in the Asia-Pacific.
We are now getting some reaction from the Japanese Prime Minister Fumio Kishida, speaking in Tokyo, saying that he is closely watching some of these developments going forward, but that he thinks that Biden saw the withdrawal as the best political decision. And so sort of quite interesting, of course, because overall we have had the general takeaway that Biden administration has been pretty beneficial when it comes to the US-Japan alliance. When it comes to China, though, Min, we had, of course, a bit more sort of policy, firm policy news after the wrap-up of the third plenum at the end of last week. Over the weekend, what did we hear?
Yeah, we heard again re-emphasis on those new quality productive forces, pouring in more resources into artificial intelligence, semiconductors, new materials, and so on. Really part of China's plan to move up the technological value chain and perhaps preparing for the worst case scenario as well in the case of a technological decoupling from the US, especially with the election heating up. President Xi himself said that national security is now placed in more prominence in the economy, but still, the official resolution says that China will try to achieve positive interactions between security and development. Now, the other big priority from the third plenum is this emphasis on tax and fiscal reform. The central government is now going to reallocate more resources to local governments to give them a bigger share of the consumption tax. And this is a very major reform. It would mean that local governments would get more incentives to encourage domestic consumption. They would also have more ability to spend in the local economies to inject stimulus to lift growth. And again, tying this back to foreign policy, it may go some way to reduce that trade surplus over the long term and address some of that concerns that China is trying to export its way into growth. Now, the other big area we were looking out for is the property sector, and China has now vowed to reform that pre-sale model, which has led to these developers failing to deliver on millions of houses that have already been sold. The central government also said that they would give local governments more autonomy on regulating the property sector. Other areas of reform, including market reform, giving market forces more play in playing a decisive role in the markets, and giving private firms more opportunities to participate in national projects. Haidi.
China correspondent Min Lo, and of course the latest being that we did have that surprise rate cut from the PBOC when it comes to that reduction in the repo rate from 1.8% to 1.7%. This is, as a reminder, kind of largely regarded as the closest thing that they have to a benchmark rate. Let's get some more from our Bloomberg Intelligence Chief Asia FX and Rate Strategist, Stephen Shewan. Stephen, this is kind of interesting, right? Because I think Bloomberg Intelligence, we're seeing perhaps a bit more of a synchronized move alongside the Fed. This has come a little bit early.
Yeah, I think it's very interesting that all of a sudden this PBOC cut rates by 10 basis points today, because actually a market has been expecting for a PBOC rate move since January, but it has never really happened. Like, part of the reasons, actually two key reasons. Firstly is because of the yuan is under pressure against a strong dollar. Now that has been relieved somewhat just because the dollar retraces after that weak US CPI. So the yen also rebound. A lot of the other non-dollar currencies rebound. So therefore now it's probably a good timing in terms of the FX development. And the other key driver is actually the plunging China bond yields. And that has also rebounded recently because China has signaled that they're going to start selling CGBs just to support bond yields. So bond yields recover a little bit. So whether from an FX perspective or bond perspective, I think now it's an optimal window, especially off the third plenum. So China now can signal further support for the economy. Actually, most importantly is the timing, because now we know that China want to move away from the one-year MLF, because everybody now just looks at the 15th of each month for the MLF cut for a policy move. But now China said that they want to move away from that. They want to have the 7-day repo rate to be a more policy rate, so to speak. So that's why the timing today is actually perfect. Now they're showing that they mean it.
Stephen, we've also got traders now raising bets for a second Trump presidency. Now, what's a win going to mean in terms of Hong Kong's dollar peg? Does that make it a target?
I mean, it's going to be a very interesting focus going forward, because it doesn't mean that it's going to move the peg, because like back in 2020, there was this news floating that Trump's advisor, I'm not sure it's Trump himself, saying that they could revoke Hong Kong's dollar peg. But the fact is, like, the U.S. can't do it because it's really decided by the Hong Kong government. It's under the basic law since 1983 that Hong Kong get to choose which currency to peg to and like whether they want to use a pegging system. So this time around, if the chance of Trump coming back rises as market has started to price in the so-called Trump trade, then one focus could be the Hong Kong dollar peg, especially once the Fed cuts rate and dollar honky drops towards the 7.75, and then the HKMA may have to come out and start to buy dollars. And we know that now Trump is actually against a very strong dollar. So when they see that like Hong Kong is trying to sort of weaken its currency at 7.75, then that's a perfect excuse for them to actually attack the peg again.
All right, Bloomberg Intelligence Chief Asia FX and Rate Strategist Stephen Chu there now. All right, keeping a close eye on futures around the world today. Let's check on how futures in Europe are opening up at the moment. We've got FTSE 100 futures. Actually, no, we've got stocks 50 futures at the top of the board there, better by 0.4%. DAX futures in positive territory as well. And that follows on from what was seen for US futures as well. S&P minis in positive territory there. Seeing a little pressure on the US dollar also, which is perhaps surprising. The euro showing a little bit of strength in the early going against the greenback at the moment. The US dollar weaker against all the G10 basket right now. Okay, we've got more ahead on the Asia trade. This is Bloomberg.
Take a look at some of the key earnings releases this week. Tesla and Alphabet, the first of the Magnificent Seven to report results this quarter. Analysts are likely to press Tesla on the progress of its plans for robo-taxis and delve into the details of Alphabet's revenue boost from AI. Here in Asia, estimates show that SK Hynix's second quarter operating income probably surged about twofold. Watching Nissan too, first quarter results could be supported by lower materials costs, that weaker yen too, despite intense competition slowing its sales pull.
Let's take a look at some of the other stories from the corporate front we're following. Samsung Electronics' largest union says it will stage a rally on Monday at the company's chip production complex south of Seoul. The National Samsung Electronics Union expects about 1,500 employees to take part. The planned event comes days after the company and the union discussed a schedule for wage negotiations. Bloomberg has learned that Nippon Steel has hired former U.S. Secretary of State Mike Pompeo to help complete a proposed purchase of U.S. steel. Sources say Pompeo will act as an advisor to the Japanese firm for its $14 billion bid. More to come on the Asia trade. This is Bloomberg.
Well, China's central bank cut a key short-term policy rate for the first time in almost a year as it steps up support for growth while shifting toward a new policy benchmark. Joining us now is Michelle Lam, who's a Greater China economist at Societe Generale. Michelle, great to have you with us. So did this come as a surprise to you? Because certainly our internal economists are looking at perhaps September, or at least, you know, a little bit more lockstep with when the Fed starts easing.
So it was somewhat a surprise, given that we've been actually expecting probably the PBOC will not move so soon. But I think it's actually an acknowledgement that there's actually immense economic downward pressure, given that we had the second quarter GDP last week. It was disappointing. And actually, if we look at the market expectations for the Fed cuts, the markets have now priced in the 2 cuts by the Fed by the end of this year. So I think and there's also been some weakness on the dollar recently. So that actually provides a good window for the PBOC to act.
Meaningfully, though, do you see that level of the cut that we saw today and the transmission process as having, a significant impact on an economy that's in the doldrums, whether you look at household consumption, sentiment, the housing market, disinflation?
So the impact may not be very significant, but to start with, I think for the LPR, there's probably the greater adjustment, given that the PBOC has been saying that the mechanism is not perfect. So probably they will try to force the LPR to go down even more than the 7-day reverse repo rate. And actually for this year, we expect a 20 basis point cut on the LPR. And on the problem of the effectiveness, and indeed it's actually the reason why we expect PBOC not to add dramatically, given the concern, also the concern of the FX stability. But, the housing sales, they are still pretty weak right now. So probably some declines in the LPR will incentivize more people to return to the housing market. And also for those people who have borrowed on the LPR, they will be able to get some decline in the interest rate payments as well. So that will also help them in terms of the income, the cash flows. So that will eventually help them to deleverage. So I think overall that's still better than no actions from the PBOC, and that also signals that the policymakers are determined to support the economy, putting the FX stability concerns maybe on a less important priority from this move.
So, Michelle, we've had a move from the PBOC, but do you feel that maybe there's something missing on the fiscal side? We've just had the plenum in a 4,000-word announcement off the back of it talking about high quality development, but considering the macro environment, did the plenum really seize the opportunity here?
Well, of course, we just got the decision document yesterday, and it's a very long document and still a lot of details to digest. But I think the significant takeaways is really the fiscal reform, as you mentioned. It actually, for this year, even though the government has announced a 1 trillion CGB issuance, and there's also another 1 trillion from last year, but we actually have not seen significant impact from this fiscal policy stimulus because of the deleveraging pressure at the local governments are still pretty significant. And you look at the land sales, for example, still continue to drop. And you look at the special LGB issuance, actually the progress is still pretty slow. And that's just because the local government are under a lot of pressure to deleverage. So I think coming from this plenum, the reform measures regarding the fiscal, the tax are actually very important. And from the decision document that we received yesterday, there are some mentionings about how to increase the responsibilities of spending from the central government, and also some reform measures on how to increase the tax revenue of the local government. So I think these reforms are definitely positive for us to alleviate the local government debt pressure. But of course, there's another question of how quickly these measures will be implemented. So it remains to be seen whether there will be any follow-up measures from the Ministry of Finance to come out on that.
Michelle, to your point on local government debt, we do have a chart that illustrates exactly the scale of this problem. Deficits have been becoming somewhat well ingrained, let's just say. This is a critical problem. How long before there's an appreciation that the signals are flashing red here and some real action is going to be needed?
Well, I think you look at the infrastructure investments for China this year, for example, the acceleration has been disappointing compared to our expectations. Based on our estimates, for example, we think from the 1 trillion CGBs last year and also some from this year, that will probably take the infrastructure investments to probably around 7 to 8% this year. But we've only seen the infrastructure investments maybe averaging around 3% in the first half of this year. So I think when the growth data is disappointing, then that is a clear message a clear signal for the government that they really need to step up on the fiscal policy. But I think interestingly, for example, from the State Council meeting last Friday, we also have some policy measures from the government that some of the CGB proceeds will be used to support the replacement of equipment and consumer durable goods. So I think there's already an acknowledgement that they really need to step up the fiscal support in the second half in order to make sure that they meet this year's 5% GDP target. So unfortunately, on the details, like to what extent, like how much of the proceeds will be used, the exact mechanism, it is not disclosed, but I do sense that there is a faster urgency from the government to really step up the fiscal support.
Michelle, does it seem to be fair to characterise the measures that we've seen from the government so far and the kind of overall attitude as trying to limit the downside for the economy, but not, kind of realistically not really seeing much upside for the economy? Is this sort of managed slowdown somewhere that they're comfortable being, given that we know some of the structural factors like, you know, the deflating of the property bubble are things that they had to deal with sooner or later?
I think from the reading from the policy signals, I sense that in the short term, they definitely sense there is an urgency to support growth. But in terms of the medium-term and long-term growth structure, for example, if you look at the third plenum, the details of the decision, actually, the government is still pretty much sticking to the approach that they need to support the supply side, meaning that they're still going to dedicate a lot of resources to the technology sector to boost the new productivity. But there are actually not a lot of policy measures to regarding how to support consumption and how to boost the household income. You look at a lot of the reform measures, actually they are pretty similar to what we have in the 14th Five-Year Plan and also in the policy documents in the 20th Party Congress, the first plenum. So I would say that overall, the medium-term policy direction is still that they will expand the supply side, ramp up a lot of investments to achieve high-quality growth. But in terms of boosting the consumption, they will not provide a great stimulus measures. And in terms of talking about the transfers to the households, building a social safety net, I think a lot of the measures are still going to be modest. And it means that without boosting the consumption, I think the structural growth slowdown story is still going to be in place. And I think that is just even getting more challenging because if you look at the news over the weekend, well, the probability of Trump winning the US presidency is actually rising. So how long could China actually stick with boosting like relying on external demand to boost growth? That's just simply not sustainable. So I think it's just that they need to at some point accept that the growth pressure, the slowdown growth pressure is just going to be remain in place for a long period of time.
All right, Michelle Lam, Greater China economist at Societe Generale. Thanks so much for joining us. Let's get to some market calls that we're following today. Credit Site says President Biden abandoning his re-election bid could create more uncertainty, which typically puts markets in a risk-off mode. The head of US investment grade and macro strategy, Zachary Griffith, sees a sell-off in equities and a flight to quality bid coming through. Haidi.
Roundhill Financial is also warning investors to brace for a spike in volatility. Their CEO, Dave Mazza, says that volatility could linger if Vice President Kamala Harris can mobilise quickly to give Donald Trump a material run. He believes if Trump continues to pull ahead in the polls and investors view his win as inevitable, then the Trump trade will take over and volatility will decline. For more, let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. And I feel like the only thing that maybe we're certain of is that there's no such thing as inevitability in the result of this, right?
Oh, yes. I think markets famously have lots of problems when it comes to pricing in political uncertainty. And I think that's because famously politics is the art of the possible. And trading markets is the art of working out what's the most probable outcome. So you think where we were, back last month, heading into the debate, sure, the sort of developments that have occurred could perhaps have been classed as possible, but you would have called them very improbable, and most people would not have said, oh, we should be buying Bitcoin and gold because Donald Trump is going to end up with a massive lead in opinion polls. No, that wasn't something that was on people's radar. So that uncertainty certainly does seem to be weighing on the Asian markets this morning. They've all opened down. It was always going to be a tough start, even if we didn't have this political news, because we had the tech sell-off last week. We had the uncertainty of an economic and business variety created by the IT outages. So in that sort of scenario, adding an extra serving of political uncertainty has helped to exacerbate the willingness of investors to go, hey, might be time to sell some more of those stocks which have been up a lot so far this year. So if you get out now and then you come back in once things have settled down, you're not taking too much of a hit from that.
Yeah, a lot of unknown unknowns we've had so far, and another 4 months to go until election day. But if we take just a look at one asset, the US dollar, softening, what's the path of least resistance here? Oh, the path of least resistance for the US dollar is down, both because we have that, what Trump said in the Bloomberg Business Week interview, and he sort of followed up to some extent on that with some other comments. He's very interested in a weak US dollar. Now, some of his policies might argue for a stronger dollar, but he's come out strongly talking that he wants a weak dollar. And in a lot of ways, you can set that aside, though. The most important reason for the dollar to weakness is also the thing that markets are actually almost certainly going to switch quite quickly to focus on, and that is we've got the Fed coming up at the end of this month. They've gone into their quiet period. They're not going to cut at the coming meeting, but the expectation would be that they will continue, unless the data turns around very rapidly, they will continue to talk about how they're becoming more confident that they will be able to cut rates. Markets have just about priced in a September rate cut. So that is the focus that is going to see the US dollar weaken.
That weakness could come at a handy time for the yuan because that PBOC cut coming earlier than expected. How much hurt is there going to be for the currency?
Well, the currency could well suffer a fair bit of hurt. It actually had been climbing this month, partly because that US dollar weakness had been manifesting, also because there were signs that, at least initially, around the debate itself, the PBOC had sort of stepped in to avoid perhaps provoking Trump or to avoid people betting that it was just going to let the yuan weaken. But now that that's out of the way, now that the third plenum is out of the way, and the outlook for China does not look great for the Chinese economy, equity markets have only climbed over the last couple of weeks, it seems, because the national team came in. So they needed to make some steps. Perhaps they decided they didn't want to ease policy in the middle of the plenum and sort of steal some of the plenum's thunder. Now you've got the plenum, which is supposed to be a plan to help turn the economy around. It makes sense for the central bank to take some of those steps that people have long been waiting for to support Chinese assets. And I think there's already chatter that now that they've cut repo, the loan prime rates will come down as well.
Catherine Reynolds, who leads our Markets Live Asia coverage. Lots for markets to contend with today. And of course, we're still watching when it comes to the aftermath of the big chip tech-related sell-off that we had really taking hold last week. Take a look at how we're trading. Still quite a bit of weakness there, particularly when it comes to SK Hynix. We're still off by over 4%. Some of the other Asian chip names also suffering, continuing to see that downside. Interestingly, we saw the early trade data from South Korea showing that chip exports are continuing to grow at a pretty good pace, and it is really a useful indicator of global tech demand as well. Those shipments have really been picking up in recent months, and that trend hasn't stopped. We've also heard from one top Taiwan tech fund saying that there's still more juice in the AI rally, and perhaps that some of these growing doubts about valuations are a little bit misplaced at this point. For today, though, we're still seeing that mix of geopolitics, some of the concerns over stricter curbs over companies that have that chip exposure to the Chinese market continuing to take hold. More ahead on the Asia trade. This is Bloomberg. And Paul, we're talking about possibility versus, inevitability in this US election story, and I do wonder what other curveballs we have in store. At this point, though, we've seen, of course, the sort of global reaction from some of the world leaders, as well as the domestic Democratic reaction with a number of, some of the other, I guess, nominee possibilities coming out now and endorsing Kamala Harris.
Yeah, we heard from Gavin Newsom, perhaps most critically, reports as well that Gretchen Whitmer, another potential candidate, both getting in behind Kamala Harris. And look, logistically, optically, clearly the path of least resistance here, but not quite unified. The Clintons are behind Kamala Harris. Barack Obama, silent so far.
Yeah, and we know that he's talked about wanting to have an open convention. Of course, I guess open in the sense that he wants everyone's voices to be heard, but it will be interesting to see how this kind of picture of unity perhaps shapes up before we get to August 19th. And the other interesting thing is, of course, who she then taps for her VP pick, right? And some of those names that you mentioned, the likes of Gavin Newsom, a number of other names there, including the Transport Secretary, Pete Buttigieg, who's also put his support behind Kamala Harris. Potentially some of these rising stars will be out of the selection that she has now.
Yeah, we heard from a lot of world leaders as well, obviously, particularly allies from the United States. Justin Trudeau describing Joe Biden as a great man, saying everything he does is for the best, he believes is best for the American people. Keir Starmer saying he respects the decision, also based on what he believes best for the American people. And here in Australia, Anthony Albanese thanking Joe Biden for his service, commitment to AUKUS, the climate goals, and Albanese also saying Kamala Harris is a friend of Australia, a strong vice president as well.
Yeah, we weren't expecting to hear from Japan necessarily, but PM Kishida did speak in Tokyo this morning saying that he thinks that President Biden saw this decision as the best one, the best political decision. They're watching further developments very closely. Let's get another view from Southeast Asia. Bloomberg's Avril Hongzhou is now from Singapore. So, Avril, leaders across Southeast Asia and that part of the world, what would they be watching for as we get this continued political shakeup in the US?
Yeah, absolutely, Heidi. I think they'll be watching very keenly, especially as we're still about a month from the DNC, 4 months from the U.S. election. A lot of the implications for the Southeast Asian region, I think, are just too early to tell. We have analysts already pointing out that a Harris-led ticket would mean a continuation of Biden's policies. For Trump, it's more about this America First agenda. But some have also said that regardless of whether we see a Republican or a Democrat presidency, it might not mean major differences for countries in this part of the world, simply because a lot of the fundamental dynamics are already at play. You think about how countries in the region are already dealing with the strategic competition between the US and China, as well as protectionist measures already. That being said, Trump has talked about 10% universal tariffs. There are some concerns about how the countries with big trade surpluses like Thailand, Vietnam, they could be targeted under a potential Trump presidency. We also have lingering worries about the kind of steadfast approach to this part of the world. Can we expect that still under a Trump presidency, especially for the likes of the Philippines amid growing tensions with China in the South China Sea?
Yeah, in terms of the Philippines, the President Marcos is going to be addressing the nation today. I imagine perhaps those remarks have undergone a few tweaks. What are we going to expect to hear?
Yeah, this will be his address to the nation at a time where he's actually seeing a dip in his popularity amid a growing rift with the family of his predecessor, Rodrigo Duterte. And among the things that we are expecting to see take center stage are his plans on the economy. But as you say, they will be, I think, watching U.S. politics very closely as well. He is likely or potentially going to talk about how the Philippines will keep its stake in the South China Sea. This is something we've seen during his time in office, where he's sort of, pivoted the Philippines more back to the U.S. in a departure from his predecessor, Rodrigo Duterte. Indeed, we've seen these growing tensions between China and the Philippines just ramping up, coming to a head. Just last month, we saw a clash in which a Philippine sailor lost his thumb, and I think that really highlighted the need for easing of tensions in the South China Sea. Over the weekend, indeed, we heard how the Philippines and China have reached an understanding on some of these disputed sea missions. Apart from what we're seeing in the South China Sea, potentially those agendas on the economy, given how inflation still remains elevated in the Philippines, and we also have joblessness, poverty, all these still key concerns domestically, Paul.
All right, April Hong there in Singapore. Another story we're following, Israeli Prime Minister Benjamin Netanyahu set to meet with President Biden in Washington on Tuesday. It's his first trip outside Israel since its war against Hamas began. Netanyahu will address a joint session of Congress later this week, and it follows Israeli strikes on targets around Yemen's Red Sea port of Haidi over the weekend after a drone attack on Tel Aviv by Houthi militants. More ahead on the Asia trade. This is Bloomberg.
Take a look at the move that we see in the Chinese 10-year yield there on the back of reacting to the PBOC's surprise rate cut, that key short-term rate being cut by the PBOC to support the flagging economy. This is sort of potentially as the PBOC is shifting towards that new policy benchmark as well. That rate cut really signalling that the central bank is recognising that downside pressure on the economy, be it you're looking at household consumption, disinflation, factory pressures as well, Paul.
Let's take a look at how we're tracking in terms of futures as well. We're seeing US futures positioning somewhat higher after President Biden announced he's not going to be seeking re-election. Kamala Harris looks like his likely replacement. Biden did endorse her as well. Further afield, we've got European futures looking kind of mixed. Euro stocks futures better by about 0.4% right now. All right, that is it from the Asia trade. Markets coverage does continue. We look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China show up next. This is Bloomberg.